get those notes going. If I talk too fast, let me know, right? So let's just get right into this now. So I kind of want to start this off with the trading plan aspect of it versus the technicals right away. Now, the reasoning for this is just an easy, right, little template, little plan for you guys to kind of get into a trading plan, start this off, right? So when I get into a trading plan, when I look for a trading plan, I just look for two objectives. They're just going to be technical and psychological. So I have posted my rules. I posted them in crypto chat, but I can post them again if needed, right? But when we are looking at our overall, right, I actually don't even need to put these up, but just our overall trading plan, we're looking at the technical and the psychological aspects of it. Now, the technical is going to be what you're looking for, right? What are we looking for? I personally am looking for, right, that impulse, that supply and demand, right, S&D, and then the Wyckoff, the confirmation within that certain zone, following imbalance, right? We're looking for areas of inefficiencies to be filled to look for certain price targets. Now, that is the technical aspect of it, right? As far as when we're entering trades, as far as patience goes, as far as what we're looking for. Now, the psychological aspect of it is going to come from how we start to manage that money, right? Now, how are we managing our trades? Are we taking profits too early? Are we taking them too late? Are we getting break even too early, right? How are we managing our trades? That's going to be the psychological part of it. So I want all of you guys, right? If you don't have a trading plan, if you already do, that's great. It works for you. It needs to be comfortable for you as well. That's something that is very, very important. Now, if you do not have a trading plan, um, it's just a quick little template, right, to get into that and to start to discipline yourself and get in that mindset of these algorithms, right? Just pumping in order after order, seeking liquidity after liquidity, right? Seeking this money because then we can get in that mindset and start to show those results, right? That those algorithms and that these candlesticks start to form. Now, with that being said, that was the briefest statement as far as it's going to be, right? We'll implement what I just said into the charts here in a second, but we're going to talk about range trading again, part two. Looking for the overall bias, right? How we can get into trades. Now, this is in replay mode, and the reasoning for this is, I believe price is over here right now, but the reasoning for this is I want you guys to just envision this, right? Envision where you would look to draw your certain range within this trade, right? Now, obviously, the most external points would be from this point right here to this point right here, right? This low that caused a new high. Internally, let's go ahead and go to the weekly just so I can show you guys. We know we were bearish, right? We did a lot of analysis on Euro USD breaks and structures downside, supply mitigations and continuations, right? Redistributions, accumulation to then distribution. What happens? Price mitigates these areas of demand that cause this internal high, but remember this internal high caused a new low. Overall, we're still bearish, so we're still looking for these liquidity points lower, right? That dumb money, right? The people who are getting into trades thinking that price is moving just like this, right? Higher, high, higher, low, higher, high, higher, low. They're getting into trades because they believe it's just higher, high, higher, low. Continuation. They're not seeing that order flow of that accumulation to then distribution, right? The introduction of supply. So this demand, yes, is valid for an internal possible pullback from this break of structure downside that confirmed this overall trend, right? So just looking at little things like that and understanding where we can be on the wrong side of the market in certain situations. Obviously, this isn't a bad trade. Remember, this is the weekly time frame. If you were getting into trades in the areas like this, right, took it up to areas of inefficiency, supply up here, but we still need to understand our overall bias. Now, this is very important. So let's go ahead and go to our lower time frames again and go to our range. But looking at Euro USD, we can see that price came down, right? Obviously, we're in a bearish downtrend. Go to the daily. We can see prices making lower lows, lower highs, lower low, lower high, continuation downside, right? That distribution downside. We have areas of imbalance that are now present from displacement candles to the downside, break of structures to the downside. So now we're going to go ahead and understand our range, right? Because we want those intraday moves. We want something that we can get in and out of quicker, right? So looking at our range, that is most present within this trade. We can see that we got a break of structure upside here. We can see some imbalance within this candle that showed that break of structure. Obviously, lower time frame breaks of structures to the upside here. But if we're looking at price action here, we can see a liquidation rate to the downside here. Just understanding the wicks, right? This is a 4-hour time frame chart, right? So if I go in the lower time frames, you'll see a liquidation rate right here. And let me just go ahead and do this just to prove it. Right? That liquidation rate downside here, those wicks that I had mentioned, I believe it was either here or here, but both of these are liquidation rates to the downside, right? You can see the liquidity is rated to the downside, those equal lows, those relative equal lows. We get a break of structure upside. New demand is introduced from the candle before the candle that broke that structure to the upside, right? And then we have our new demand that is formed, and from that we get that continuation upside. So now going back to the 4-hour, understanding our most recent range, we saw where all of that was mitigated. We're looking for our next break. We saw another break right here, so we could possibly draw this range from now this low to this high right here, or we can look for areas over here, right? Now I can see some sell side liquidity that is formed right here, right? Those relative equal lows, as well as that imbalance that we still have right here. So I'm going to go ahead and use this low to this high right here. Right, so now we have our range that is drawn out. We can see more breaks of structures upside if we're looking on a 4-hour chart. This large candle caused that impulsive move to the upside, so this now creates a range. You can use this one as well. That is perfectly fine. To your range, right? Looking at this like this, if you're on intraday trying to trade this like this, right? But I'm just using that entire imbalance that was created from this candle right here, that first sponsorship, most recent unmitigated demand, right? Imbalance that was left behind. So now let's go ahead and play this out after we have drawn that out just a little bit here, right? And understanding now that we have created our range, right? We have rated liquidity to the upside from that range that is now introduced supply on lower time frames. We can see price broke structure to the downside right here, right? Came up, rated that liquidity, introduced new supply within this candle right here, and from that moved lower within the range into areas of demand over here. Now that it created a high, I'm going to use this range right here. Let's go to the 4-hour again. Now, we understand overall, right, that we are bearish. Let's go to the daily time frame. We understand that price can liquidate some highs here, possibly come down into discount, right, of this range right here, fill some inefficiencies, get into some demand right here, right, pull that liquidity from that, accumulate, continue to the upside from a possible daily break of structure right here. I would be looking at demand around here. Now, we understand overall we are still bearish, right? So our range that was created from this most recent strong high to this most recent weak low is still bearish. Price can move up to these areas, right? Fill these inefficiencies and still have the possibility of moving downside. But we understand that a fair value gap, right, area of imbalance is created right here as well. So that is shown right here when we come up into that area and mitigate it. Just with that little wick, price comes up and flicks into that, right? Let's go back to the 4-hour. So now if I want to look for my intraday move, right, or my swing move within this point in time, I'm looking at my 4-hour, right, confirming it from the 4 to the 1, or you can do it from the 4 to the 5, from the 4 to the 15, however you are wanting to risk your trade, right? So let's go ahead and wait for now that displacement that we need to see for that reversal or for that possible trend change to either the upside or the downside, for continuation to areas of supply up here, or continuation to the downside to attack that sell side liquidity, right, from the overall draw of liquidity, which is this daily low right here. Now playing this out, right, we now see that liquidation rate to the upside, and then we see that bearish candle that is formed right here. That tweezer top, right, candlestick pattern that is formed right here, but we're looking at this as more of a liquidation rate. If we go to the hourly time frame, we can see that same exact thing that is shown right here. Price comes up, right, raids liquidity of these highs, and then what does it do immediately after, right? It breaks structure to the downside, and we see that move to the downside. Supply is introduced within these areas. I want to now see this low broken, right, for that full show of weakness, right, to the downside to now show me exactly what I want to see. All right, we can see that liquidity rate on the lower time frames. 2 large candles giving a lot of imbalance, right? And then price immediately breaks structure to the downside, showing me more supply introduction. We are still, right, in premium of our overall range. Remember where we are at, if we are in premium or discount, how we are reacting within these areas where we creating liquidity, right? We can see that liquidity that is being created here, those equal lows. So let's go back to the hourly time frame and wait for now that hourly structure break to the downside. So we can see that price showed a possible structure break to the upside right here. I want to see again that displacement right to the downside. What do we get? A possible displacement candle right here. And then price moves higher into areas of possible supply up here from this high that caused this new low, right? But now we need to see that 15-minute structure break to the downside. So let's go ahead and show this again. Remember, we're continuing to now make, from this point in time, from that liquidity rate to the upside, after we took all these shorts out, right, we are now making lower highs and lower lows, lower high, lower low. If we respect this high that caused this new low, then I will still be looking for, right, that downside. Now the hourly is showing, right, it's showing this liquidity rate to the upside. How can we confirm that as a liquidity rate? Now when it comes up into these areas, right, and fills in inefficiencies on lower time frames within these areas around here, all right, we can see it filled this imbalance that was created right here. Price completely filled that, and then from that we saw a move to the downside. If we are looking for a certain trade now, we need to look for an area of displacement, right, that was caused from now the 15-minute structure break to the downside. Everything is shown, right? Everything is now aligned within our time frames. We can now target, right, areas of liquidity, lower areas of demand, lower within this higher time frame range. So let's go ahead and show the hourly again, right? We can see now that the hourly broke that structure point to the downside. So we had a low that caused this high, but did it cause that overall high? Did we break this structure point right here? No, we did not. So we're still assuming this low that was created right here, as well as all this sell side liquidity that we can see be formed as a weak low. So we are looking for still those lower prices from our higher time frame bearish sentiment, right? And then now to our lower time frame bearish sentiment that was created. Now we can see this one liquidity rate to the upside, lower time frame introduction of supply right here. If you were in trades right here, perfect. If not, that's completely fine, right? We can still wait for that continuation to the downside. We can see price came up into these areas, filled this inefficiency right here, continued to the downside from that. So going again back to our hourly, liquidity rate to the downside, price moved back up, liquidity rate to the upside, but we are still looking at this as a lower high, right? Price comes down. As long as it respects this high that caused this low right here, I'm still looking for lower prices overall. Let's knock it out of this. All right, so now let's understand, right, where we are going to look for our trade now at this point in time that we have received those break of structures downside, right, confirming now where we are looking to possibly take our trade. Let's go ahead and go back to the hourly where we got that displacement, right, where that was shown. We can see this candle broke structure to the downside right here. We're looking at areas of supply that was created, right? We have a displacement that was formed right here. Go ahead and put that down as a supply, right? So if we can see price trade back up into these areas, possibly raid liquidity of this, come back up into this area, right, of supply, that caused this lower move to the downside, then we can still see now that continuation to the downside, looking for those lower prices, right? We can see that liquidity rate to the upside. It's now tapping into our higher area of supply, and this is something too that MentaFX mentions a lot, but some smart money traders won't show you, right? Because we are looking at this displacement, we are looking at the continuation to the downside, looking for areas of supply, but we get into these situations where our zones don't work, right? That's completely fine. Does that disprove my bias? I don't know. We have to confirm that, right, with now our lower time frames when coming into these areas. We still have this high that caused this low internally, right? So looking at these areas of supply, if we still respect these that were created from here, right, these areas of supply formed right here. So let's go ahead and take this out, because now if we look at this range, from this most previous low that caused this new high, what were to happen, right, if we were to take sales right here? That was in discount, right, of this range. So you can see now how we can get confused when looking at these areas, and we can look for areas in premium now. We can see that displacement to the downside, right, that sponsorship of that break of structure, that M that is shown right here. And then we see that buy side liquidity, so those early sellers, right? We have an institutional candle and a candle of supply that is formed right here. So as long as we respect this, right, I'm looking for those lower prices. As we are coming into these areas, right, we raid the low of the range, move higher, and we are starting to show now that every price, or that price is being taken care of, right, as we're moving up into these areas. Let's go in the 5-minute, and we can see that unhealthy price action as price starts to push up into these areas. Right, so we are looking for this now area of supply to be respected. What happens, right? Raise liquidity to the upside. Completely fine. We are still looking for our overall trade. Now, if we look at this, we can still wait for now an hourly break of structure downside after coming into these areas. This looks more like a liquidity raid, right? You could be like, oh, are we reaccumulating because we came down into discount, showing some type of accumulation? But to me, right, we're still showing price higher in premium of this overall range, right? Taking highs, leaving these lows, all of this sell side liquidity that is being formed right here. Now we see price raids that high right here. And then what do we get? We get a break of structure downside right here with displacement. So now that we were at our range, right, we look to confirm that. Did we get in any trades? No, we did not. We had two areas of supply that we were possibly looking to take, right? What happened? It was raided. That's completely fine. What happened after? After the raid, right? After all the shorts from this range to this range were taken out of the trade, right? We get a break of structure downside, introduction of supply now with a clean displacement candle that is formed, right? I have an institutional candle as well as a candle before candle, right? That broke structure to the downside, area of supply that I can now be looking to take this trade off of. So if we want to refine this now to a 15-minute, right? We can see again that candle before the candle that broke structure to the downside. It broke multiple points, multiple lows that caused new highs. This was that algorithmic introduction, right, that we were looking for. We thought there was one right here. There definitely could have been, right, on this displacement candle. We looked to confirm it. Did we confirm it? No. What happened? Price just moved up, right? Rated the highs. But what did it put in? Another break of structure to the downside, right? That distribution that was formed. We took out highs, left these lows, right? And then we saw that break of structure to now the downside. So if we are looking for limits, right, within these situations, I don't personally play limits, right? I personally like to market, enter. But if we wanted to refine down to areas of the 15-minute, right, we could look for this candle within this zone. And then again, now targeting that overall liquidity of this range, we have areas of demand lower down here as well. So let's go ahead and let this play out now. We're on the 15 minutes, so we saw a 15-minute break of structure to the upside at this point in time. So price could still come for these highs, right, from this low that caused this new high. Right, just to make it simple, not to confuse anyone, this could still be possible from this internal range because we could still come take these highs and still mitigate areas of supply up here. As long as we respect this high that caused this new low, we are looking for lower prices. But we now got another break of structure to the downside, right? And we are looking for price to now go into those areas. So what happens? Price taps into our supply candle that is formed right here. Let's go into lower time frames now and see how we can get that confirmation when coming into these zones. Now you can see price puts in a low and then puts in a high right here, but we see all this liquidity that is being formed right here, and I don't see a lot of demand, right? I don't see any demand, any lows over here that cause new highs. So this is showing me that all of this is now available, right, for the taking. And I can also see that price came up, right? We have a low right here that was broken to the downside with displacement, right? We saw price create that sell side liquidity right here, come up, raid the highs, show a low, show a lower high, first break of structure downside, second break of structure downside right here. Displacement candle is formed, right? I now have a 5-minute zone that I can possibly be looking to now take this trade off of. So if we wanted to move this, let's just move this to the side right here. Then show now that 5-minute displacement zone, right, that we had right here. So I now have greatly reduced risk, right? Still looking for the lower prices overall from our daily buys. Just looking for one thing, right, over and over and over again. We are looking for now sell side liquidity within here, right, for possible first partials. If you're looking at the risk to reward, right, 16-1, perfect. Even on this swing low that caused this swing high, if we are looking for the demand within these areas, still a 14-1, perfect area to partial, right? Or we can look for that overall range still. So let's go ahead and now watch price come into this and see what price action does as we are coming into these areas. All right, we see we raid this high right here, put in a low right here, and then we possibly raid liquidity here. Yes, we do. Still showing lower highs, lower lows. What happens? We tap into this demand, and it's leaving a lot of buy-side liquidity. So this is now showing me, right, that this zone is bringing more validity to my confidence, right? And why is that? Because we are creating a zone of early shorts that are thinking the trade's going to continue to the downside, right? We saw the early shorts right here, liquidated, tapped into an area of supply, broke structure to the downside internally, right? Mitigated this area of demand. We now have early shorts again. We are looking for those to be liquidated for price to tap into this area of supply. And then we are looking for another break of structure to the downside. It's the same exact thing over and over again, right? So let's go ahead and play this out now. We see price taps into that area, immediately break structure to the downside right here. I'm looking for price to now respect this area, continue to the downside, or fill this fair value gap from this liquidity rate to the upside right here, and then continue to the downside. So let's go ahead and draw those out. You can put this out in red. And these are just going to be quick examples, right? We're going to get into XAU too. Our bias, how it's playing out, right? And that continuation. We saw price come up into these areas, fill actually this imbalance from this break of structure to the downside, and then continue to the downside. But now that we are in our trade, right, we have done everything that is needed to be done. Let's go ahead and actually show you the 1 minute where you could have gotten to the 1 minute at this point in time, right? So let's go ahead and play some replay. So we have our first area of supply zone. I would be completely fine with taking that 5-minute candle, right, from the risk to reward that it would allow me within this situation. But if we wanted to look for a 1-minute trade, so now I want to look for this low broken, right? And then I want to look for the most immediate supply zone that was created that broke this low on the 1 minute that showed that displacement, right? So let's go ahead and play this out. We can see that low that is broken right here. What sponsored now this large move to the downside right here? This area of distribution, right? So we now have a candle right before that candle that broke structure to the downside internally right here, left that displacement, as well as an institutional candle. Again, an area of supply. We are looking to be respected. If price can come back up into that area, we now have the 1 minute, right, confirmation, break of structure downside, mitigates this candle right here, this institutional candle, and then from that we get that continuation. So we can still see how from the 4 hour to the 1 minute we were able to get that trade, right? And understand the range of what we are looking at. So we are looking for the liquidity, right, lower. Let's go ahead and play this out. Bring these out a little. Stops over this high right here, right? Let's go ahead and watch what price does. Rates that liquidity, right? That sell side liquidity goes into discount of this range right here. Overall, we're still bearish. So now at this point in time, we can target areas of demand down here or target areas of liquidity or overall, right? This daily low right here. Now that we have been in and out of our trade. But that's just EURUSD, right? How we were able to see that range, this was a very, very confusing, right? It could look very, very confusing, but as long as we are showing that simplicity, right? Understanding that we got a raid to the upside here, supply introduction from a break of structure to the downside here, confirmation of that break of structure to the downside with a double break right here, right? That M that I was talking about, that I show a lot in chat on my charts. Price comes up, right? Puts in a high, puts in a low. You have your first break here, second break here, area of supply within what caused that first break of structure, right? What made this M, market maker M, this distribution that had played out, right? What happens? Price comes back up into those areas. We see more supply that is created and confirmed, and then we get that final trade to the downside from this scenario here. So let's go ahead and get out of replay mode now. And go ahead and go over to gold. And understand what we were looking at here. So those who have been following gold with me, we were looking at this break of structure upside right here, looking for a reaccumulation, that continuation for higher prices up into this 1800 area. What did we receive, right? Exactly that. Beautiful, beautiful play, move by this pair, right? So if we're looking at exactly what we were talking about before, when we had done our last stream, right, I can't remember exactly what date it was, but we were looking at gold and we were within this area, right? We had not made this expanded move yet at this point in time. So let me go ahead and bring this back right here. And we were talking about Wyckoff, and we were talking about rally-based rallies and drop-based drops. So reaccumulations and redistributions and how they are effective within ranges, how we will be looking to trade them within ranges. Now, what this means is our first half of each range that we are looking for a continuation markup, right, is going to be either distribution or accumulation. And then the second will be as well the opposite. So before I confuse you or what anything means by this, for a continuation phase, for a reaccumulation, we are looking for a distribution to then accumulation. So what this means is this distribution creates sell side liquidity, right? That liquidity we were talking about, those equal lows, so early longs getting into trades, it creates that. What happens? We liquidate those lows and then end up breaking structure to the upside, showing an introduction of demand within this area, so we can now look for trades and look for the overall higher time frame bullish bias, which was created from this break of structure right here. What sponsored that? This move right here. We created our range, right, with this impulsive move to the upside, and then we wanted to look for sell side liquidity as well as demand within these areas. And the opposite now, to keep it as simple as possible, right, for a redistribution is going to be the literal opposite thing. So what this does is now create those equal highs here, gives liquidity, gives reason for now price to move higher after we created that demand. So let me go ahead and draw that out right here, right? We have that liquidity and then liquidity here as well. So that is for our reaccumulation. So a rally base rally, right? When this will be in areas when traders are looking for demand zones down here, right? They're like higher high, higher low, higher high, that continuation, right? They're looking for demand zones down here, but we're looking for the continuation from the most recent demand that was created, right? Still understanding our most recent range on higher time frames and looking for trades within. Now, our redistribution, right, is going to be the literal opposite. So price comes down, early longs start to get into trades. So this is where the accumulation phase occurs, right? And then price moves up. We liquidate highs, so we take out all the early shorts that were trying to take price continuing to the downside, right? Trying to get in those trades, putting their stops over these highs. What happens? That gives reason, opportunity for price to move up into those areas of liquidity, take out that liquidity. And now that the shorts are taken out, right, we raid highs, introduce supply, and then continue to the downside. So now we have all of this sell side liquidity available here, as well as all this sell side liquidity available here. We take out the early shorts here, right? And now everyone's like longs, 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 right? It's going up into these areas of supply, but instead we break structure to the downside, create more supply within these areas, right? Respect that, and then continue to the downside. And we leave everyone who is trying to short up here or long up into these areas in the dust, right? So that's what we're looking at for our ranges and for reaccumulation and redistribution. So the first half is going to be, right, for the reaccumulation, which was what happened within this scenario, a distribution to then accumulation. So we want to see a manipulation of highs, liquidation rate to the downside, break of structure to the upside, and then accumulation, right? That break of structure to the upside shows that introduction of demand, liquidity rate to the downside of the range, and then a break of structure, and then continuation. So let me go ahead and get rid of this. We will get into Bitcoin and ETH here in a second. We're just going ahead and showing this just so we can get over, right, what we talked about before, because we had shown this range, right? I was with you guys and we had looked at price, live price, before we had this markup, this continuation to the upside. We were looking for higher prices overall, right? It was posted for these 1800 areas from this break of structure, liquidity rate to the downside. So within our range right here, let's just go ahead and play this out. Right, we got that distribution, creation of sell side liquidity, what we were talking about before, right? And then we saw the internal break of structure to the downside, more sell side liquidity is being created. I have a demand candle down here that sponsored this break of structure to the upside from our most recent range that was formed. Price comes down into those areas, taps that demand, right? Mitigates that demand, takes the sell side liquidity here. So now I'm looking for some sort of demand to be introduced. What happens, right? We are showing some sort of introduction of demand. And then we raid this low right here, raid this liquidity to the downside. And then this is when we have that markup phase, right? All this liquidity that was available, that buy side liquidity that we were talking about. So now that the early shorts, the early longs were taken out of trades right here. And now the early shorts or the late shorts were taken out of trades right here. We now have the ability to continue to the upside, right? Another break of structure and that continuation. So let's go ahead and go on the lower time frames, understand where we could have gotten in the trade at this point in time, right? We see that liquidity rate to the downside. We see this break of structure to the upside. If we're looking at the most recent candle, it would be this candle that was formed right here, right? Obviously, that is rated to the downside. But if we are looking at what sponsored that, where the demand candle was, right, where the actual consolidation was, we can see an institutional candle that was formed right here. So this low right here, when we came down, rated liquidity on lower time frames. Let me go ahead and show you the 5 minute so you can see what I mean. This low caused this high right here. We have imbalance that was formed. So if price can come into these areas, right, mitigate areas of demand. Let's go ahead and bring this back, put this on like the 1 minute and see if we can get a demand candle within this area, right? That reaccumulation that occurred right here. So we now have demand. Did that demand create imbalance on a break of structure with displacement? Yes, it did right here. Break of structure to the upside, imbalance that is formed right here. As well as sell side liquidity that is formed when price came down to these areas. So as we take out lows and open and introduce liquidity into the market, we mitigate demand from this break of structure to the upside. So we can now look for those higher prices. What happens? We get that break of structure upside, and then we see that continuation from that. Let's go ahead and go to the 15-minute and see where price actually traveled. Now this is a reaccumulation, right? So if we're on the 4-hour, we can see now how it looked bearish, right? They're like lower high, or lower low, lower high, lower low, short, short, short. Everyone is shorting this supply zone right here, right? Or this candle right here, thinking that price is just going to continue to the downside. They might have had limits up here at the 50%, even right here, right? And we can see that price reacted from that. But we are still bullish from this low that caused this new high right here. What happened? Did price close underneath this low right here? No, it did not. It just rated that liquidity and then broke structure to the upside following. So all the dumb money that is getting into trades right here, thinking that it's just lower high, right? Lower low, lower high, lower low, lower high, lower low. What happens? Buy side liquidity. They are now that exit liquidity and where we are looking to take profit, right? Versus looking to get into positions. So now we see, again, that continuation, liquidity here, supply zones up here, and then I believe this is where we're at with current price. So yes, so another range example of what we are talking about, right? We can see it being shown very, very prevalent, right? I'm glad this was live and you guys were able to see this play out, how that reaccumulation occurred before we talked about it on stream. But let's go ahead and go to Bitcoin and ETH now. We got about 20 minutes left. So let's go ahead and look at ETH now. We talked about our range trade that was formed right here. Let me go ahead and get rid of all of this. Let's just hide it. Get rid of that and look at current price. Playbit was talking about, right, that major supply zone that we were coming into on the daily time frame that was formed right here. If I'm looking at this, right, I see a lot of buy side liquidity. Again, we can still respect that supply and demand. It does not have to come for all of this liquidity, right? It could take this high right here, introduce new supply, continue to the downside. It could take this high, this high. It's really where the supply lies, right? We need to look for the candle before that displacement candle that sponsored that break of structure to the downside. So looking at our weekly time frame, right? Let me go ahead and get rid of this. But we have this large move to the downside, right? A lot of bearish candles. This got everybody into shorts on these areas. We can see a lot of equal highs, relevant highs that are formed within these areas, showing me that liquidity is being formed. So I have areas that price could possibly come back into, right? Around the 2200 range, 2300 range, if we do not respect this supply that we are currently at on the daily time frame. From this redistribution, right, we got a break of structure to the downside. Price came back up into the institutional candle that sponsored that break of structure to the downside. And then we got that continuation, right, came up into areas of supply, filled inefficiencies here, broke structure to the downside. Then price rated liquidity to the downside, introduced demand when we broke to the upside here, and we are now seeing that move higher into the range here. So if we are looking for the most recent high that caused the most recent low on the daily time frame, right, where supply was introduced. For our range, we can see we are coming into a premium of this range, but overall, we know we are still bullish, right, from our monthly standpoint. So this is where it gets very tricky, right? We can see that we came into this monthly fair value gap, imbalance, whatever you want to call it, right, from this break of structure to the upside, this displacement candle that was caused. We did not, right, mitigate that demand, so we could see price possibly come back into this now imbalance that was filled up here. Again, this is all coming together, right? From a standpoint, we can see we are still looking for this general area on every single time frame. On the monthly, we can see we are looking for this general area, right? On the weekly, we can see we are looking for this buy side liquidity right here, right? This consolidation candle before another breakdown to the downside right here. On the daily, right, we can see the imbalance. We can see the candle before that candle, areas of supply right here, right? On the 4-hour, same exact thing, right? Imbalance that was created, break of structures downside, continuation of that range. Now we are coming into premium. We do have areas of demand still that are being formed. If we respect those areas of demand, right, let's go to the daily time frame. From this break of structure to the upside, right, we had a liquidity raid, break of structure to the upside, area of demand that was formed. right? We could see price possibly mitigate these areas of supply, put in another range, and then we will be looking for now that accumulation or distribution. So for the distribution, right, we don't want to see, or we want to see price create that sell side liquidity and rate highs and then break structure to the downside, and we will be looking to now take that trade to the downside for continuation, right, of our overall trend. Or for reaccumulation, we would look for a distribution coming into areas of supply, and then we would look for the creation of buy-side liquidity, accumulation after we come into these areas, break of structure, and then we can look for now trades within these areas from that demand creation. So as far as ETH goes, right, as Playboy was saying, and as I believe, we are in a very critical zone. Same thing is going to go for Bitcoin. So let me go ahead and go over to that. And then if you guys have any questions or anything like that, go ahead and feel free to let me know now. We'll
Where are you going?
GBP. And then after we go over GBP
Where?
and ZD, we will be done with that as well. And then we will end our class for today. But let me go ahead and go to Bitcoin. All right, we talked about areas lower into demand. We can see that we had this liquidity rate to the downside from this range we were creating here. Another liquidity rate to the upside, large areas of imbalance, right? This is that very, very no man's land that we are formed. So we need to look for our most recent areas of demand, right, that we are creating from accumulations, break of structures to the upside, right? I'm looking at demand candles at 21,551, right? Demand candles at 23,126. If we can still show that higher time frame bullish structure and form those higher lows, then we will still play that trend to areas higher into supply, right? Or if we show that creation of that sell side liquidity, we continue to take highs instead of respecting demand. And then we see that displacement to the downside, right? That break of structure to the downside. Then we can look to now take those trades to the downside. So let's go ahead and go to GBP and ZD now. I have a lot of TA on this, so let me go ahead and get rid of this for you guys real quick. But let's talk about two most recent trades that occurred on GBP and ZD. Now, it was the short right here to the downside, and then it was the long all the way back up into these areas of supply. So if I go ahead and show you where this occurred, right, if we are looking at what caused this break of structure to the downside right here, right, we saw one break right here, second break right here. So what we were looking for, again, to make this as simple as possible, supply introduction within these areas, right? So we're looking for supply up within here, possibly continuation to the downside, right? Down into areas of discount into sell side liquidity from our overall, right, bearish sentiment that we have put in. Break of structure downside right here, break of structure downside right here, another break right here, right? That continuation. We do have a lot of buy side liquidity being formed, right? And price could go to raid those highs from this low that caused this new high internally. But we are still looking for trades to the downside, right? As long as that is being formed, as long as we are still respecting that supply, right? So let's just look into these areas right now, right? We saw this high that caused this new low right here. I had drawn out a 5-minute supply zone, but just to do some refinement to show you guys what we are looking for, right? We saw this wick up into these areas. So this is where your liquidity, right? Your liquidity rate happened from this range right here. And then you got your break of structure to the downside. So your area of supply, right? I'm going to be looking for within this wick. Let's go to the 1 hour. And then let's show the refinement within this area as well. So looking within these two candles right here, I found this on the 5-minute a while back. This was posted in FX chat for anyone who does not, right, or wants to go back and reference that. The candle before the candle that broke structure to the downside after that liquidity raid occurred right here. Why did it occur right here, right? We saw that this low right here caused this new high, as well as this low that caused this new high right here. We have a displacement candle as well as an imbalance that was formed after the liquidity raid. So this was your area of distribution. So the candle before that displacement candle, right, is this candle that was formed right here. Right, so price traded to the downside, and I wanted to show you guys the actual long from this area, right? How we can still look for longs when coming into these areas. Now, after that area of supply was created, let's go ahead and go into replay mode. We have the rate of the lows, right? Rate of liquidity. Tap into these areas right here, right? We're just playing structure, looking for new supply and new demand. I'm not really worried about anything to the left right now, right? At this point in time, I receive a break of structure to the upside on the 4-hour, right? This candle is actually your candle that closes over this high right here that caused a new low. So your area of demand is going to be within these areas. Now, this is where it gets important, right? And this is where we need to start actually looking at the price action, right? The story, what it's telling us, and it will get boring, right? This is when back testing is going to get super, super important. Going to look at this, right? We were like, we deemed this as the demand candle, right? The candle before the candle that broke structure to the upside on the 4-hour right here. But if we look at this next candle that was formed from that break of structure to the upside, we can see it rated this low right here. So what does that tell me? That liquidity was rated and new demand was introduced within this wick right here. So instead of using this candle, I'm going to be using this wick because all of this previous price action within this candle right here has been taken care of with this raid to the downside. So this is my demand that I'm going to be looking at. Now, if we want to do some refinement, we totally can. Let's go to the 1-hour. Right, we can refine to this candle right here. We saw this break to the upside right here. Again, it's showing me that same move, everything I wanted to see, right? Internal high that caused an internal low, and then a break of structure to the upside. Candle before that candle, right, is formed right here. So I now have an hourly zone, right, to look to possibly take trades off of. If I want to refine this to the 15-minute, I have imbalance within, right? I have an institutional candle as well, so we could draw it out like this. Let's even go to the 5 to refine. We have institutional candles, right? If I wanted to go to the 5, I would be actually looking at a 1-minute price action within this zone to look to where we could refine this. Now, if I wanted to do that, right, I'm looking for now that W introduction, the accumulation, the break of structures upside, where demand was introduced, where something was not mitigated, right? So I can see price came down, and then we broke structure to the upside right here, right? Price came back down into these areas, right? Filled this imbalance that was formed right here, and then broke structure to the upside right here. So I now have an area of reaccumulation that was formed right here that caused this break of structure that ultimately caused that entire move to the upside. So if I wanted to do some refinement now within the 1-minute time frame, right, I can choose either this candle here or the institutional candle, right, that was, or use the imbalance, sorry, that was formed right here overall. To now look for price to possibly come back into, right, mitigate those areas for a possible limit order trade. All right, you have your break right here. Actually, it's this candle. And then you have your institutional candle right here as well, lower within that. But you now have a refined zone, right, from your higher time frame break of structure to the upside that you can possibly be looking to take trades off of. Now let's go ahead and watch what price does. All right, let's understand what price is doing right now. We are creating that sell side liquidity, so as it's showing me that price isn't very healthy. We come down into those areas, tap into those areas of demand, right? That we had done all those refinements from those break of structures to the upside. So if we are in long trades right here, targeting this high right here, that'd be very, very valid, right? Or we can be in long trades right here, targeting this area of supply overall. Now, why am I targeting that area of supply at the higher time frame range? Because, right, this high sponsored this new low. So as long as we're over or under this high, I can still see lower prices. But we have buy side liquidity that was formed, right? A lot of liquidity. And we now have break of structures upside showing me accumulation, another reaccumulation, right? That I can now hold this trade to that higher time frame area of supply. So let's go ahead and watch this play out, right? So let's go to the 1 hour. So this is a very volatile pair, right? We can see it moves up and down a lot. We see a lot of wicks, but still using that mentality of a liquidity raid to the downside, break of structure upside, confirmation of that break with another high that is formed. We now have an area of demand, right? That W that is formed within this area to show us that introduction of demand still. We are looking for this on every single chart, right? This is how I am looking to take my trades now. So we see that continuation up into those areas of supply. It mitigates those areas of supply, and then we now see that move to the downside. I do believe prices, yeah, this is current price right now, but we saw just by doing a little bit of work, right, from this break of structure to the upside here, break of structure to the upside right here, we saw the sell side liquidity again that was formed, as well as equal highs. So now that the early longs are taken out, we tap into demand. That now gives us all the fuel we need to now continue to the upside overall. So I hope this helped you guys with just range trading in general, right? Understanding that we are only looking for one thing, and this is something too that you guys need to write down when talking about trading plans, right? When trying to focus on a trading plan, figure out your trading plan and look to make a trade, because we are looking for the same thing over and over and over again. Now, don't be afraid to be wrong, right? I want to be wrong. You want to be wrong. Your P&L is composed of your wins, losses, right, and your break evens. It's not composed of just wins. If there was somebody out there who hit 100% win rate every single day, right, every single month, we're able to get what I want to get just by using one strategy and saying this can be applied to everything, every market, however it is, just take it and go. You can always win 100% of the time. I wouldn't be trading, right? I wouldn't be putting in this effort. I would go find that person and I would make sure I had the ability to get that done, right? But obviously, we need to put in that effort if we want to replicate those results, right? Versus just figuring out a certain pattern, right? Trying to put something up and then getting emotionally frustrated. Now we have a plan. We are looking for 1, 2, 3 steps, right? And then once those 3 steps are met, we are in our trade targeting, again, the opposite of the 1, 2, 3 steps. So within this scenario, right, our supply introduction was here. We were in a long, counter trend long, but we are respecting our supply, right? So we are looking for that buy side liquidity, areas of supply to take profit, right? Still being conservative and not being greedy and saying, I'm going to trade here. I'm going to hold this all the way up because I think we're reaccumulating, or take it to these equal highs here, these highs here, right? It doesn't have to come up to those areas. As long as we are looking at our most recent trend, right? Then we can understand what price action is doing. So I hope that cleared up a lot for you guys when looking at those ranges. And I'm super, super glad that this XAU chart did play out as it did, right? Exactly to bias that reaccumulation that we were looking for had occurred, right? Again, we talked about Bitcoin and ETH as well in our most recent ranges, how we can get to range trading. So if you guys have any questions or anything like that on range trading, feel free to backtest, right? Shoot me some charts in chart chat, and we can get together and talk about where we can look for certain trades. Now, on our next stream, there will be a part 3 because I did not talk a lot about range trading. I didn't go super, super minute into details. I'm going to show you guys, right, how we can get into this range, and instead of waiting for the break of this, right, and getting into this trade right here, because this could be the situation, right, where we miss this. Personally, I missed this trade, right? I did not get into this trade, but the idea was sent out that we were going to move higher. We are reaccumulating. And from that, right, we saw those higher prices. But I didn't get you guys into how we can actually get into these ranges now, right? And understand we had a internal liquidity rate to the upside here, right? Price came up, respected this high that caused this internal low. So if I was looking for trades here, I could take a trade here targeting this most recent low right here, right? That setup is now formed. Same exact thing, right? This is my entry here to here, confirming with lower time frames. This is just an hourly chart right now, but I'm giving you guys the idea of what's happening. So we got a liquidity rate right here, 1, 2, 3 with an imbalance, right? Here's our fair value gap. Sell side liquidity down here as well as down here. Price comes back up, trades into the fair value gap, right? And then moves lower. So I now have trades within this range, more opportunities within this range, utilizing these concepts, right? But to show you just the overall, and why I show you guys the overall and why I show you guys the range break, because that will be your safest trade every single time. This will be your most confirmed trade every single time, is waiting for every early buyer and every early seller to get out before that final move occurs. So we wait for that range liquidation, right, of the buy side or sell side liquidity, and then introduction of demand or supply, and then we look to take our trade. But again, I hope this helped you guys. I appreciate everyone popping out on a Friday night, right? You could be doing a lot right now, but instead you guys are here trying to put in the work, right? Writing down notes, trying to better yourselves, and that's very, very admirable. And I appreciate it, right? And we will post this on YouTube. Everything will be posted on YouTube again. And if there are any questions or anything like that, feel free to hop in my DMs. Let me know. Post them in crypto, wherever you guys can reach me. And with that being said, I hope you guys have a great night. Thank you guys again, and I will see you guys later.
Thank you.
Yes, sir. Thank you.